Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, thank you for making time today.
Good afternoon, Devin.
The stocks in New York were up Wednesday on expectations for stimulus measures in China. What exactly is the story there?
U.S. stock market slightly increased yesterday under ongoing coronavirus spread. This upward market movement is related to expectations on Chinese government's very aggressive support on Chinese economy. And also solid sales of U.S. houses were another positive factor on U.S. stock market yesterday. Along with U.S. market, European markets and Chinese market increased slightly also over yesterday and today.
Well, here in Korea, though, the KOSPI and the KOSDAQ started out higher, but by midday they were sharply lower. What happened today in the Korean market?
Both of KOSPI and KOSDAQ decreased by 67 basis points and 46 basis points respectively today. 31 new cases of coronavirus infections were reported yesterday, and the aggravating coronavirus situation in Korea is related to today's stock market decrease. In today's market, domestic institutional investors like insurance companies and fund managing companies were a large seller, but instead, individual domestic investors bought the domestic stocks.
Well, now the global credit ratings agency S&P has drastically lowered its growth forecast for the Korean economy this year. Last year, Korea just managed to make 2%. That was a struggle. But now S&P is calling for 1.6% this year. The coronavirus a factor there, of course. Why did they lower the growth forecast, and what's your own view?
As you said, of course, S&P's a lower economic growth forecast for Korean economy is related to coronavirus outbreak. Actually, previously, Moody's, which is another major rating company, also downgraded Korean economic growth to 1.9% from previous 2.1%. So, broadly speaking, it should be pointed out that coronavirus outbreak will decrease Korea's domestic consumption and production of the nation through a weakened global value chain, particularly related to China.
Well, speaking of that risk, the IMF has identified the coronavirus as one of the main risks to the global economy. It's recommending that Korea, for one, go ahead with an expansionary fiscal policy, as it's been doing. But what kind of monetary tools does Korea still have at its disposal?
I'm pretty sure that Korean government will implement expansionary fiscal policy right after the end of coronavirus spread. But it should be pointed out that expansionary fiscal policy does not have any significant stimulation on domestic economy if it is not supported by central bank's monetary policy or decreasing interest rate. Since, as of now, Bank of Korea's base rate is 1.25% per year, we still have small room to decrease interest rate up to 0.5%.
Well, on that subject, Dr. Kim, finally, what do you think are the chances of an interest rate cut next month, and what would be the factors that the central bankers would take into account there?
Actually, until recently, Bank of Korea has strongly maintained the position of leaving the base interest rate at 1.25% level. But after having serious and unexpected external shock from coronavirus outbreak, the possibility of interest cut became very high. I'm not going to say they are going to cut the rate in the next month, but I would say they will be cutting interest rate by 25 basis points in the first half of this year.
All right, Professor Kim, we'll be watching for that in the months to come. Thanks so much for coming on today. We appreciate your insights, as always.
Thank you very much.